Welcome to TalkTickers. Today, we are digging into SB Financial's second quarter earnings call. And this one is interesting because the bank put up some really solid numbers, but the market's reaction, well, it was pretty much a shrug. So we're going to unpack the numbers, what management had to say, and what we think is coming for the next quarter. Let's get right into it. So right out of the gate, you hear this from the CEO, Mark Clean. Talk about confidence, right? He's basically saying, we're in a great spot and we're about to leave our competitors in the dust. This quote, it really sets the theme for the entire call. Management is bullish. Now, our job is to figure out if that's just talk or if the numbers truly back it up. Okay, so let's talk about the setup. To really get what's happening in Q2, you've got to look at what they were doing right before it. You see, expectations for this quarter were actually pretty high and for good reason. They made a couple of really smart moves. So here's what happened. Back in January, they closed this big Marblehead acquisition, which really beefed up their balance sheet. Then in Q1, they did the smart thing. They took all the one-time merger costs on the chin right away. That basically cleared the deck so Q2 could be a really clean, strong quarter. And then, the cherry on top, in June, they got added back to the Russell 2000 index. Now, why does that matter? It puts a lot more eyeballs on the stock. So you've got this perfect positive storm brewing as they head into the quarter. So with that setup, how did the numbers actually look? Well, I'll tell you, they did not disappoint. This was a really, really strong quarter from an operational standpoint. Let's get into the nitty-gritty. Let's start with the headline number, 60 cents. That's their GAAP earnings per share. But the real story here is that it's up almost 28% from the same time last year. I mean, that's a huge jump. It's a really powerful sign that the company is getting more profitable, plain and simple. They're making a lot more money for every share out there. And where did that profit growth come from? Well, you can see it right here in their revenue. Operating revenue shot up over 22% to more than $17 million. And what's really healthy about this is that the growth wasn't from just one place. It came from their main business of lending and from their other gigs, like their mortgage and title companies. Just a really well-rounded performance. Okay, now this, for any bank, this is probably the most important metric to watch. It's called the net interest margin, or NIM for short. You can see it expanded by 36 basis points. Now think of NIM as the bank's core profit engine. It's the difference between the interest they earn from loans and what they have to pay out on deposits. Seeing that gap get wider, that's exactly what you want to see. It means their main business is just getting more and more profitable. And the good news just keeps coming when you look at the whole balance sheet. Total loans, up almost 9%. Deposits are up over 12%, partly thanks to that Marblehead acquisition we talked about. And tangible book value per share, which is a great way to measure a bank's actual underlying value, is up almost 8%. It's just solid, healthy growth across the board. So the numbers are clearly strong, no doubt about it. But what's the story that management is telling to go along with these numbers? Let's get into their side of things and what they see coming next. They really painted a picture of why things are going so well and why they think it's just the beginning. So management really focused on four main things. First, they kept saying the Marblehead deal was a total home run. And get this, they kept nearly 100% of the deposits. That's almost unheard of. It's absolutely huge. Second, they pointed out this is their fifth quarter in a row of loan growth. The momentum is real. Third, those side businesses, mortgage and title, are firing on all cylinders. And last but not least, their asset quality is looking great. Charge-offs are way down to basically nothing. And they didn't just talk about the past, they gave some pretty confident guidance for the future. They're expecting that all-important net interest margin to get even better in Q3. They're guiding to a big year for mortgages. They also think they're going to resolve some non-performing loans, which is just another way to juice earnings. And here's a really interesting tidbit. They're easing up on stock buybacks. Why? To save up cash? Maybe for another acquisition. They're keeping their powder dry. Okay, so let's recap. We've got great results and a super confident outlook from management, so the stock should be soaring, right? Right? Well, this is where the story gets really weird. Let's talk about the massive disconnect between what the company said and what the market actually did. I mean, just look at this. On one hand, the message from the company is all green lights, amazing EPS growth, better margins, a rosy outlook, a successful acquisition, everything you want to hear. And the market's reaction? A shrug. The stock went down a tiny bit on the day of the news, and nobody was trading it. It was basically crickets, total indifference. This is the million-dollar question, isn't it? Why the disconnect? When you see numbers this good and a stock price that just yawns, you have to ask, what's going on? Is the market missing something here?
Or are we missing something?
Well, the answer probably has less to do with the company's performance and more to do with the stock itself. You see, SBFG is a thinly traded microcap stock. In plain English, that means not a lot of shares change hands every day. There aren't a ton of Wall Street analysts covering it, so big investors might not even know about this great quarter yet. It's kind of like shouting good news in an empty room. The information's out there, it just takes longer for the right people to hear it.
So that brings us to the big finish, our call on the stock. We actually think this disconnect, great fundamentals versus a sleepy stock price, creates a really interesting opportunity. So what could happen between now and the next earnings call to wake the market up? Let's talk about the potential catalysts.
We're watching for three main things. First, they have to deliver on that promise of more NIM expansion. If they do, it proves this profit engine is still revving up. Second, if they clean up those problem loans like they said they would, that money goes straight to the bottom line. And third, another acquisition. Even a whisper of another smart deal could be the spark that gets investors really excited. Those three things, that's our thesis.
So with all that in mind, our rating for the next call on SB Financial is outperform. Bottom line, the company is firing on all cylinders. Growth is strong, profits are expanding, and management is executing their plan perfectly. We believe that if they hit their targets next quarter, the market is going to have to wake up and start closing that gap. These fundamentals are just too good to be ignored forever.
And finally, you know the drill. This is our analysis, but it's for informational purposes only. This is not financial advice.